Hi everyone, welcome to another episode of World of Oil Derivatives. I'm Greg Newman, the Chief Executive of Onyx Capital Group, and today is a very different episode we've got for you today. We're actually filming live in location in my home, and I'm joined with a lovely crew and James King. Now, James King was brought in at my last company, Mandara, to build out and hire the team and develop the team that became a huge presence in the market, in the financial markets, and obviously that's where I built from to go on and start Onyx. So the reason we're doing this special episode is because I'm announcing the release of my book, which has got the same name as the podcast, World of Oil Derivatives. And James is here to discuss the motives for it and talk a bit about the history and what it's all about. So James, thanks so much for joining. I know you've got a busy time, busy day and all that, but yeah, cheers for coming over.
Well, Greg, thanks for having me here. I'm delighted to be here. For me, this is the book that I wish we had 10 years ago when we started on this, pursuit of trying to really make a dent in this industry.
Yep, no, thank you. And again, that's the first thing I want, listeners and viewers to be clear on. Like, you are there at the very beginning. There's a lot of great context there. The market particularly changed around 2012, and that's pretty much when you started your big hiring spree with everyone, right?
Yeah, absolutely, Greg. And there was a unique opportunity presented that we had to capitalize on. And in order to do that, it was absolutely paramount. We identified individuals that had the specific types of capacity to meet the demands that were going to be imposed on them in that trading environment. Back to you, Greg. If you were to talk to us about what was unique about the market, say 10, 11, 12 years ago, compared to what we're seeing now, the big things that stand out to you?
Yeah, the main thing, like even remembering those images, memories of when we first started, it was just an entirely different market. This is actually the beginning of 2013, but the exchange had announced the listing of these new futures contracts, or oil swaps we call them, onto the exchange. And suddenly it was opened up for, obviously there were barrier to entries, but if they're on the exchange, suddenly, small companies like Mandara could set up and trade these contracts. Now that was always ran and traded by the biggest of players, the trade houses, the majors, but actually way more important at the time were the banks. The investment banks had a huge presence, and they dominated this market in terms of the volumes themselves, the risk and the access. But almost overnight, with the exchange releasing these contracts, we suddenly had an open playing field that was a massive vacuum, right? People need to go in and fill that with liquidity, with trading activity. It was the first time technology was widespread around this area, and it was just onwards and upwards from there. So if I think about where we are now and where we were then, I mean, it's night and day. I mean, back then it was still all about legacy oil trading, the physical stuff, the big shoot from the hip, big risk. The banks were still that kind of attitude, even though we were kind of post 08. And the mentality was just rife in there. And you remember, right, like when we were taking on this industry essentially as guys who had no clue, 22-year-olds, and just one guy knew what was going on, which in Alf, in the owner. We had this task to take on the industry and kind of add value, generate returns, and I don't think any of us would have thought, what it became, but we had to kind of approach it in a very humble and like dedicated, iterative approach. That is what what you're all about as a performance director and your whole career. So I think that's the best place to start. The kind of attitude difference, and of course the structural difference being the difference between the exchange and the banks owning things. But yeah, now I look at it, and we're in a world that doesn't feel like the oil market. The oil market's meant to be opaque. It's meant to be, ran by just a few players. It's meant to be murky. It's not like that at all, and it's continuously not like that. And that's the trajectory we've been on, right? The technology, the data. I talk a lot about this in my book, about how it's developed, and that pathway, the democratization of access, but also the information, getting educated. That's allowed more and more players to not only enter the market, but actually know what's going on. And everything's like a self-fulfilling, virtuous cycle that has created like a financial market like any other. And now we are where we are, where I would go as far as to say, and I do go to say in my book, that actually the financial volumes are so big, this area is so big, it's actually more influential than the physical. And bringing that back to 10 years ago.
Could you give people that might be listening who may not have the context people working in the industry might have, in terms of how the market's changed in relation to volumes, profit, some of the metrics involved?
Yeah, I mean, I guess if you were a hedger in an airline or hedging in any company that has exposure to the oil price, traditionally, you're not looking, or 10 years ago, before 10 years ago, you weren't even looking to trade in the market. You wanting to go to an expert that was most of the time a bank. You'd want to be told basically top level what's going on, what you need to do, what the strategy is. And I think the general consensus was they know we don't. We're going to get a service and it's all the way through. So the actual trade itself was a little bit immaterial because you're going to get the trade from a bank salesman who's advising you, has had a look at your books, what you need to hedge, all the rest of it. And then they'll go out and get you a price, put the trade on, and you don't even know what these contracts mean, like Mediterranean jet fuel like versus gasol diffs and things like that. You don't know what that is. You just know that you've been advised that is the best way to hedge it, for example.
Yeah.
Whereas now, it's everyone, pretty much everyone, they may be getting advice from independent consultants, but they're going out and they're looking at the screen themselves, looking at the values, the trades, their services that provide all the information you could possibly need for pretty much anyone to go in and trade. So in that particular example, airlines, shipping companies who aren't oil traders, but they have, hedging requirements, they are acting like traders and acting like, any other trader in the market pretty much because of this democratization.
And they certainly have the opportunity to do. And the things that jump out at me here that I absolutely love about this story and about the book in general is those three words: transparency, meritocracy, and democratization, which ultimately all benefit the consumer and everyone involved in the market.
But it's a pretty profound point just to say that off the bat, because it is true, right? That was the whole, when we started, tiny traders with low amount of risk, and you didn't know anything at the market. What right do you have to be in this industry that's...
Well, how do you find an edge?
Exactly, and most people would have said, and most people did say, don't waste your time, get out. But your point about shifting the baseline, once you have a fresh approach and you're not burdened by legacy beliefs, like you need to learn all about the physical supply and demand, you need to spend 10 years in oil fields and operations, and you have all these trades like majors essentially who have great, fantastic training programs, but they're in order to trade physical barrels or operate physical barrels. And I think they've started to realize, well, they've certainly started to realize that financial markets, it's a very, very different concept. Just because you know a lot about the physical oil, that's not necessarily going to help you when you go to trade financial markets. Trading is trading. And I think that was the approach that we had and how you helped build out the trading program.
I think
was all
that's
about.
A really important point. And the key thing we did was step back, and it's cliche to say at the moment, but it's engaging in first principles thinking. What are the fundamental aspects that set people up for success as a trader in this environment? And we're looking at the basic fundamentals, of course, from the physical side, but also the trade craft, optimized decision making, eliminating bias. All these things are absolutely critical.
But that I just want to emphasize, that was a big deal to look at it like that. Like, what is this job? It's trading. It's financial trading. So things like, how do you form a trade? How do you form risk-reward profiles? How do you risk manage and how do you minimize loss? How do you maintain a good mental profile? All these things, I got to say, were not existent in the oil market.
I still don't think this is the norm in general. It may feel so to us, having been through the journey we've been on, but aside from organizations like Onyx, it's not standard practice, and it needs to be. And that's why I think people need to read this book and start putting some of the principles to work. So one thing I found particularly challenging is there's this body of information, this software almost, that we need to upload into the individual to make them functional in the environment. But there's nowhere to go and get it. We've obviously got one expert in the room, but he's busy running a company. He's trading full time.
He wasn't very patient either. So.
No, he wasn't impatient. He was a hungry animal that has a lot. Yeah, incredible guy, incredible person. The sort of two resources we have are, the Leffler, petroleum refining, Oil 101, but these are all from the physical side, and there's so many enormous gaps that just make you almost completely inept as a trader unless those gaps are plugged, and that's how we inevitably had to find a way through the journey we ultimately went on. I think this book's going to enable people to understand what's going on in a more succinct way.
Yeah, and I'm really glad you're saying that, because ultimately that was one of the biggest motives. Every single time I've talked about this market, you want to approach it with an element of humility. It's like, look, this is work for me and this is what's going on, but I'm not actually sure, 100% sure if people aren't already doing this or what they're looking at. But as the years went on and it became more and more evident that, even other traders at other trade houses were saying, there's nothing for me to give. There's a few articles online maybe, but nothing that's really dedicated, beginner to, medium or even advanced book that takes you through the journey of what actually is this area. So even distinguishing between the two worlds, between physical and financial, is just not done. So that was a massive motivation, a little bit of a gap, if you like, and why I've kind of done this in the first place. And it was actually a podcast I did last year where I was effectively having to go back and explain the whole thing. And it just made me think, you know what, this needs to be done. And you know, all the learnings from the very first day we met at Mandara, through there and through starting up Onyx, has been a constant learning. So all the kind of, I guess, conclusions, if you like, it's not like it was obvious and there, you know, it's been built up over time. And I guess I've had more and more confidence, because one thing I would like to say back almost to myself is like, but there was a time where even I thought, yeah, but the physical information is really important to this. And we were kind of almost trying to reverse engineer back. We're like, right, we know about inefficiencies in markets, curves, how to trade value, how to structure trades, be very much a pure trader. Now let's learn about the physical and we'll have a bit of an edge. And I know if you remember, like even Alpha was like, we'll give you a suit, you go out and network with people, get information. And, you know, we still believed that that was really, really important, because that was the kind of belief in the market. We just happened to be approaching it from a different angle. But the more I went on, as I say, I kind of started to realize that this was having more and more of an influence. And as the volumes grew and started to dwarf the physical, and as you started hearing more and more uncertainty, if you like, in the wider market about what's driving things, you know, even policymakers like OPEC, what is going on? They had to organize a whole conference, and I was there. I was lucky to be invited, and others were there to say, like, what is going on with financial markets and how are they impacting the wider market so much more than we thought was possible? And so it's coming at a time, this book, when I think these questions have been asked and answered to some degree, and we're now on this journey, which, you know, I think the timing is right. But I'm sure in a few years' time, everyone will kind of have this kind of view.
Okay, so Greg, why did you write this book?
I think it just has to go back to that distinction. It's, you know, all the things in the world about physical, you know, people will tell us about geopolitical incidents, you know, things are happening in different countries, wars, and they think that's going to affect your market, right? So, well, no, I mean, that's going to affect oil for sure, because everything pretty much affects oil, especially geopolitical events. But the derivative market, the financial market, is a separate thing. So it's being clear about that distinction. But it's all well and good saying there's two worlds, but it's actually going and explaining how it was developed in the first place and how it's developing. But then I like to think what I've also done is, or at least gone on the way to doing, is creating that link and making that link understood. Because there is a link. It's about how the price reporting agencies who settle the price for these contracts, where they get their information from and how they use that to create a final price for contracts. They do use physical, but it's a very specific type of physical. It's very specific types of information they're collating from very specific players. So what the actual link of physical is to derivatives and its real impact is what I'm exploring. And I guess the idea is like, I'm exploring the mechanisms beyond anything. There's no like subjective, like, well, I think this is how people should think about markets. This is how it's being created. These are all the functions in there, the players, the mechanisms, you know, even things like flows. A flow is just a buy or a sell, like breaking down who does the buying or selling, why, how it influences the price, how things are held together. I just don't think that's been done before. And I'd like to think that this will kind of raise that bar in that respect.
So for me, the book's almost an operation manual, right? So if you're an experienced trader, there's certain chapters where you can zero in on specific mechanisms and extract value there. Alternatively, like we talked about, if you're starting at ground zero and you're completely late to the industry, we can go from there and work your way through it from beginning to end.
Yeah, no. I get it. I think when I think about the mechanisms that underpin derivatives, first of all, you know, they always were there, but were they really laid out and were they really understood? And I think you have to go back all the way to, yeah, but what actually is an exchange? What actually is a contract? And why can't I just go out and buy oil? And why do I have to buy a financial contract? And does that not just give me oil? And all these kind of questions, you have to start back. And actually, I've got to be honest, like, and I do put this in the acknowledgements, like someone who was really useful for that was my dad, because I was working with a copywriter or trying to work with a copywriter to try and work on the flow. They're like, this is way too complicated. Like, I don't know what you're talking about. Like, we had another, I think Maori, who's helped me run the final edits and the project management of it, was saying that someone came back and said, look, we thought we'd get this done in 3-4 days, but this is by far the most complicated subject we've ever tackled. So it's just one of those things. It's not like it's hugely intellectual. It's just you've got to learn the language and you've got to earn the concepts.
It is a language, isn't it? If you're
it is. Yeah. But what I'm trying to say is, from a mechanism point of view, you've got to start right from the beginning, like what is this and why? There's little things, like little pieces of language even, where you're like, why is it like inter-dealer brokers? What's a dealer? We don't use the word dealer in the market, it's inter-trader brokers, but we call it inter-dealer because of a legacy kind of, way of talking, and people used to be called like little things like that. And ultimately you go from why, what is a contract? How does oil really work? How did that link to a financial market? Now you've got a financial market. How do you build a financial market? Do you build do you have a contract for everything? But how do you actually get that to trade? You need to, create benchmarks. What is a benchmark? How does it work? And you go on and on and on and on and on. So I know I've kind of waffled, but I guess what I'm trying to say is the mechanisms are underpinning really at its core and trying to methodically add upon it throughout the book. Having my dad being there, being like, look, just generic person who's got no clue about the oil market. Let me explain it to you. And you ask me the questions, and you are, quite frustrating sometimes. So what do you actually mean by that? And you're like, you really have to pull it back all the way to the beginning. What is really going on here? And then once you do that, it liberates you, right? Like discipline sets you free. And suddenly now you can build and have such confidence in what you're saying. So I think for me, I don't think, even though this is a book that I think is great for the person who wants to have, a bit more of an understanding of what's going on, I would go as far to say there's not a huge amount of people in the industry have, I don't believe, really tackled the whole picture of financial markets. They've linked the two, physical and financial. So I think it can't be useless for even experienced traders. Just, does it reaffirm what you know? Does it challenge some thinkings? And then when I get into more of the analysis parts, now I'm getting into things that I think are very topical. What really drives markets, and the historical way to trade markets is do your supply and demand analysis and get the best possible information you can. It's a massive rat race to try and get the best edge in physical information. You've got people putting like, standing outside refiners and trying to, know what the power, electricity is going into the refiner, how much is being produced, getting little edges like that. Everything is geared towards knowing about the physical market, then making an assumption about the future, and then buying or selling. But I'm saying there's so much more to go from there. Who's doing what? At the end of the day, prices move because of buyers and sellers, and the net result of those buyers and sellers. So, those buyers and sellers, how much risk do the buyers have? How much risk do the sellers have? Because at the end of the day, if one's got more risk than the other, then that side will win. And breaking down positioning of why people position the way they do, and trying to get that picture built up so that you can then take your supply and demand information, you can then create more of a tradecraft or trade plan around more technical things, more specifics in the financial market that are actually going to move it short term, and you could build much more of a cohesive trading plan. So I think at a minimum it should help do that. And if people want to laugh at it and whatever and say, I would never do that, whatever, that's fine as well, right? At the end of the day, I'm just presenting my thesis, which has worked for training all the staff we've got at Onyx. Mandara, we learned these principles like by being very hands-on, and the evidence is there. I mean, that's the backing of kind of this thesis, if you like. But at the end of the day, it's not like it's written in stone like a Bible. So.
Absolutely. In terms of oil markets in general, there's a word that floated about to describe their nature: opaque.
Yeah.
Can you talk to us a bit about your perception of that?
So I think when people say opaque, I mean, it is an opaque world, the oil market. At the end of the day, the Russia-Ukraine situations, the conflict there, there's oil moving around from Russia, either through kind of diverse areas around the Mediterranean or specific areas, but it's also going east, it's going to India, it's getting refined there, and it's getting sent back to Europe. There's all these things going on. There's all these trading outfits that are set up in Dubai. These are widely reported now, and it's not actually illegal. The sanctions framework is very clear. Like Russian oil is allowed to flow, but only under certain conditions. But with that comes, legal loopholes to go through, and trading houses with very specific physical trading kind of mentalities and operations. Now, it will always be opaque, that world. You can't have a centralized hub for trading oil. I mean, I think we've proven that. You have to have, cohesion and like centralization of all regulations around the world, all legal systems, and that's just a political, it's idealistic. Yeah. So I think that that's where it comes from. Every major every economy in the world is in some way linked to oil. But then I don't want people to think that the financial market is opaque, because that's the wonder of it. If you want to trade in it, actually all the information is there that you need to trade off the back of it, to use off the back of it to trade. So I don't
think... That's the key distinguishing factor, I guess, between the physical and...
Correct. But then the ironic thing is the physical now uses the financial market to set prices. So it will say, where is that benchmark pricing? Right, I'll agree a plus or minus differential to that. So by definition, the financial is now setting the physical price to a large extent, like 95, 90%.
Who's the tail and who's the dog? Yeah.
Exactly, and that I think is hard to dispute now.
So are there any gatekeepers in the industry?
Yeah, so when you think about gatekeepers in the oil market, again, it kind of goes back to the opacity in physical markets, and then no one's disputing how much money is made in oil markets, and especially the physical guys. Like the trade houses and majors last year or this year even have reported like unbelievable records. So I think naturally speaking, when you've got so much money being made in anything, there's going to be an element of protectionism. And I think that is definitely rife in oil markets, particularly physical, but it has since changed, and there's a lot more legal cases, regulations that's come in, there's more adaptions, there's more democratization as the kind of the essence of the book. So it's a lot harder to protect the kind of legacy beliefs, certainly in the financial market. In fact, as I said, when I first entered, I mean, you remember, we used to talk about this all the time. So I'm coming into the market, 22 years old, 23 years old, and how am I meant to, get going with this market? How am I going to get more information? How am I going to get taken seriously by the brokers?
Especially trading crude, right, of all the products.
Yeah, I mean, it's a major. I was trading the, Data Brent, which is the price is 70% of the world's crude, and even though it's a select number of individuals, the brokers didn't want to know. Trading in too small size, wasn't going to pay them enough commissions. I wasn't cool. Remember, it's about being a big wig at a major or a trade house. And if I did manage to get the chance to go out and meet these people, you're a kid, and I was a kid, and you also you kind of shouldered off. You'd have like weird instances where someone would be talking, you say, okay, this is my opinion on it, and look at you like, okay, anyway, and that kind of thing, like classic, like childish, like kindergarten, and it still exists to some degree, by the way, and that's we're always going to have that kind of cool kid mentality in areas. It's just what it is. But I would think that used to be a very powerful thing. If the brokers or the traders didn't want you in the market, there was a way to stop you. It was, you don't need to be shown these numbers. If you ask a question, we don't need to answer it. And without the information, how are you going to learn about what builds this whole thing? So remember, like a lot of my initial journey was like constantly learning what was going on. It's a big exploration. And I think what the financial market's done, and with the development of technology and trading and all the transparency that has come with that, is completely destroy the gatekeepers. Like they cannot stop us knowing everything that goes on. And actually, I've got to give credit to, the independent kind of research houses who have got ship tracking software or build their own, world-class supply and demand modeling, and they present them in subscriptions, right? There's their services, but they're so good. The energy aspects of it as well, the Vortexes, the Keplers. These guys are so good at what they do that actually what they've ended up doing is that it's leveled the playing field like amazingly well.
Which is incredible, right?
It's incredible, and it's part of the journey. Like even though they haven't directly been
and I
analysing
guess this book's
financial,
another step in that direction.
It is, but that's what I'm saying. Even though they haven't directly been talking about financial markets, they've helped democratize the market by almost eliminating the edge in the physical,
sure,
and helping the understanding. So again, going back to the gatekeeper, if someone wants to say, you don't know anything, you don't know about physical, I'm like, but I can literally subscribe to that service and know exactly what you know. And that's a fantastic, level playing field to be in. Yeah,
absolutely. So is there potential this book's going to piss anyone off?
Yeah, I mean, maybe. I think at the end of the day...
No, that's never stopped you.
No, it's never stopped me. And that's a principle of, who was going to make it in the Mandara days and onwards to Onyx and starting a business. No one wanted us to succeed, right? You've got to have the mentality of, I'm going to stick to it. I'm going to block out the noise. But I think that it's not my problem if people want to be holding on to things that, are anti-evolution, right? We can't keep, no matter who you are, you can't keep things protected for very long.
You can't fight nature at the end of the day.
You can't fight nature. That's a lot of what you talk about, right? At the end of the day.
Yeah.
That's what it comes down to.
So what do you think is going to shock people the most?
I've already had some quite early feedback, which, thrilled to get, and I've got it, it's in the acknowledgements. People have helped me out and read it, and I really, really appreciate everyone who's helped me so much. One trader, I wouldn't say was shocked, but I think it was very interested to learn how the market makers, especially with their ability to trade, all these different contracts and provide liquidity in areas that's typically very hard to provide liquidity for, to learn that a lot of the liquidity that's setting the price in the very front of the contract, setting the price of literally oil set tomorrow, that's coming from market makers who are getting flows from like next year's trading, and they're bringing it back down through the time spreads and the forward curve. And to learn how much of an impact those flows have on the very prompt because of the market making activity, that's quite, I guess it is quite shocking to really understand that. You say, hang on a second, I've got all the physical, I've got all the information, and I've got the bullets, I've got the balance sheet, and you're telling me that you're able to shift flows from a hedger in Q1 2025 and bring it and sell me when I'm trying to buy. It's a very, it kind of widens your scope about what's really going on and what drives markets.
So what's been fascinating for me to observe is the success of a lot of the market makers in the space, and that continued almost acceleration of that success.
It's crazy.
And where do you think it's going to, what's your prediction on where this is going to go for the market making organizations out there like?
And this is something I tackle as well, generally wider about the market, but again, it comes back to evolution, right? If you were tackling inefficiencies, buying one thing, selling another, and then trading the time spread, an algorithm can do that way quicker than you could ever do. So that kind of inefficiency is either gone or will go. I think different types of inefficiency, like when people say like efficient market hypothesis, like everything is always priced into the market, that absolutely is not true in oil at all. There's always natural inefficiencies because someone's rushed in to sell all their hedging volume way too quick, and they've used a low liquidity time period, so the price goes down temporarily, but it will go all the way up again. That's an inefficiency there. So I think it's less thinking about kind of market making necessarily as a kind of classic sense, more like, so I love to say liquidity providing, because at the end of the day, you are just trading, but it ends up being a liquidity provision, right? Because you're doing so much trading and you're trying to, iron out these inefficiencies. It ends up providing liquidity for all the traders. So I think what I'm saying is the adaption's got to be for market makers to continue to really understand markets more and deeper and deeper and deeper, to the point where they're able to continue to provide liquidity. Because it's not just oil, right? Every other financial market, all the retail, boom in retail trading, boom in people taking ownership of their own investing, the demand is for on-market access, for liquidity. And liquidity means a good price as well as good volume, right? Anyone can charge a crap price and in huge volume, but providing huge volume for a really good price, that's a skill. I think that will always exist in the markets, and I think it can only grow. And I agree, I didn't think it would keep growing. When I started Onyx, I said, we've got to diversify, we've got to think about how we leverage what we're doing into services, which we did do, data, research, etc. But actually, I'm just seeing this liquidity model just be more and more in demand. So if you trade more and you trade more products and you kind of get on top of this growth of the number of contracts and the increasing number of participants who are increasingly able to access and understand this market, then you'll keep growing as well. So I think it can keep going, and we want to tackle all the commodities and energy. So, I'm super excited to be running this business still, and I think the future is bright for people who can do that. But I've got to say, with our history as well, some places don't make those adaptations, right? And I think it does come back to the mentality and behavioral nature aspect.
Absolutely. I'm sure that'll be an interesting one to watch play out.
Well, but here's another question I want to throw back to you. I mean, you've overseen, build out this team, help Alf build out this team, class of 2013. If I look at those people, me and Omar went and set up Onyx. We've got a guy who went and set up our biggest rival. We've got, 4 people went to another competitor. One went to a trade house. These people have had a big impact on at least the market making and financialization side of things. In your point of view, like, what is the difference between one and the other, and people who have even failed and worked and changed industry even? Like, there's got to be a consistency.
I think ultimately the individuals that have gone on to excel have been exposed to a very specific set of conditions that we thought very hard about in terms of setting them up for success. So in terms of, they were identified specifically for the strengths they had to match the markets they trade. They were exposed to training conditions and standards that were extremely high and challenging for them to meet.
Well, this is what I just reminded me when you're saying that. I mean, you and Alf, both, obviously my mentors and helping me build, and all the uncertainty and all, like, I didn't know how to tackle any of this. And you're talking about the kata, like the approach to how to set goals and break down those goals and break down the obstacles and be creative about how you overcome them. And it's just struggle after struggle after struggle in the early years to develop this, but always having the belief of you guys. But then I remember Alf saying, like, God, you are the luckiest guy in this firm. I'm like, how am I the luckiest guy? I literally have the worst desk, the most efficient market. You know, it's so opaque, like at the time, you know, how am I the luckiest? But he's saying, because you're spending this time, like getting so deep into the market, learning about it, learning how to really tackle things. And then once you get through it, you know, you've got that for the rest of your life. And I always think back to that and think it's been such a gift to be able to go through those struggles and get through it. And
Absolutely. And I think looking back, that's what we tried to do from a strategic perspective, was to like identify where people were set up for success and then zero them in on opportunities that matched that, trying to put those square pegs in round holes. And then for me, having watched you evolve, you come in as this ambitious, hungry guy. During the selection process, there's clearly areas where you sort of scraped through, and there's other areas where you truly excelled. And we've certainly see that whole truth for your career. You've had to work hard and to bring those other areas that were slightly weaker up. But then the things that came naturally to you from day one have been the things that you've truly gone on to excel in. And I think this book almost summarizes that. One of the things that stands out for me is in the selection center, where Alf comes out of the training room and literally in the middle of the training floor says, I've never met a guy in an interview process that is so sincerely interested in the oil markets and knows so much despite almost zero experience. And I think that holds true. And we've seen that pattern amplify across time as you've gone from aspiring junior trader to CEO of the world's largest market making firm in terms of all derivatives. Okay, Greg, so changing direction slightly, writing a book.
well, you know all about it, right?
Yeah. It's an emotional process. Can you share your experience with it?
I think
A hell of a process.
So I think I do want to mention, obviously, you've been really important in my development, and your book, Accelerating Excellence, is essentially a collation of all those principles that you instilled in us. But I think I was one of your more believers than most and successful off the back of it, probably, right?
Funny that.
Yeah. But I think, ultimately, I was thinking that, how are you gonna create a book out of all the things that you said? Because there's loads of different things. The biggest challenge is a flow and a narrative, even though it's a textbook, effectively, right? And the same, I think, with this book.
Yeah.
It's like no one's going to read a textbook, though. I don't believe that anyone really wants to read a textbook unless it really is that academic. You need a bit of a flow to it. Now, I'm not saying I've written a really well-written book, but I've at least tried to make it flow from step to step to step. And I think that was the challenge you must have had as well, right? But that took me a long time.
Yeah, I think it's so hard because
For me, I felt like I was writing the book to I had so many different people in my head I was trying to write it to. And that made it really challenging for me. So your dad's an incredibly smart, successful guy, but he's from a completely different industry.
But that was it. It was, I built my career on cutting feedback. Like, you certainly didn't hold back when you were training, and Omar still doesn't hold back now. And I think
that's fundamentally what we're screening for, because if you cannot take that feedback, then how the hell are you going to keep pace with the learning curve and the standards we're going to set in terms of the ambitious goals we've got? And it's some people that lights them up. And others just aren't.
The important bit, though, is with feedback is, do they actually care? Because if someone just wants to put you down, then they're going to say anything negative to put you down and hurt your feelings. But the opposite happens when someone wants the best for you, right? So if I put like Omar, yourself, Alf at the time, or like my dad who helped me with the flow of the book at the beginning, obviously they want the best for me. So they're saying, this is crap because you need to do better because I know what your goal is. So they're saying, I wrote like 85,000 words in like 2 months. I was like, I've nailed it, all my stuff. And it was effectively unreadable because it didn't have a flow. I hadn't explained some things to launch to the next. So I think that's why, my dad's one of those guys as well, doesn't want any credit, but he was incredibly helpful and brought me back to the homework days when I was 6 years old, bit of childhood trauma coming back.
Yeah,
but
I can imagine.
it was really nice, and I think important, and I think you have to do that. And I don't know if you had that, but I think that had to be said and that had to be figured out. And as soon as that was figured out and there was a structure, then it kind of did write itself in the sense of like, it was still a long process because you had to be very precise about things, but you at least knew what you were writing.
Has it changed the way you perceive things?
Yeah.
Because for me, it certainly did.
It was really important for me for that exact reason.
I would recommend it to anyone purely for the development.
If you want to excel in a specific area, you need to go and write the book on it.
And if you look at it and go, I don't know what I'm talking about in the sense of like something's missing here, that's a good thing.
It's almost the ultimate consolidation of knowledge.
Absolutely 100% agree. I will say though that the target audience question is always the hardest thing I've had to deal with, because I think people are interested in financial markets, interested in oil and commodities, but we're still a little bit of a leap to get to where this kind of niche area is. That I really hope, and I hope Onyx have a big part to play in democratizing that even further, so that I can talk about this generically to the whole world, you know, and people will kind of have a bit more of an understanding about it. But we've got a way to go. But what was inevitable was, you know, the first quarter, let's say, or the first chapter, yeah, people can follow, enjoy it, but it inevitably does get more and more deep. And I think, naturally speaking, you can't please everyone, right? And that's an element of it. Like, but you know, you have to accept that, or I feel like I had to accept that to a certain degree. Like, at what point am I willing to lose the listener or the reader? Because, you know, at the end of the day, it doesn't help anyone. Because if I'm going to go right down to basics so that, you know, generic, well, whatever, someone next door can read it all the way through, then what have I really done? Because that person isn't really going to trade it necessarily. They're not going to,
of course,
you know. So that was a bit of a challenge, I'd say. But as you say, it really crystallizes it, knows what you're trying to do. I mean, it's definitely helped me in my business, to answer your question.
Okay, Greg, finally, when's the book coming out and where can we find it?
So the book is coming out this summer. It's going to be available on Amazon, and you're going to be hearing about it on social media, LinkedIn, and promoting the book and talking about it here and there. And I think there'll be a book launch as well for you guys to hear about.
Brilliant, mate. I just want to say congratulations. And as a friend and former colleague, I'm just so proud of you. It's been a privilege to speak to you about it, and long may your success continue.
Mate, thanks so much for coming down and making this work.
Anytime.
So we're going to leave it there. Thanks so much for listening to this slightly off-piste podcast, and we'll be back next week for more in the podcast studio. Please make sure to keep an eye out for my book. It will be available on Amazon and available for pre-order imminently. So thanks very much for listening, and speak to you next week.